In fact, currently we have no bearish setups on the Edge Finder. If we flip this around, this is pretty much everything we've got. Aussie yen, Aussie CAD, dollar yen's actually getting a bullish reading, which we've got to look at that one. Kiwi yen also getting a bullish reading. The German DAX, the Chinese stock market, platinum, the FTSE, the S&P, NAS, Russell, and Dow. Let's take a look at gold here. So gold is also very much a neutral reading for me on the Edge Finder. Of course, I'm missing out a little bit here and wish I was in this trade. This is a beautiful move that we've had in the last 2 days. Bulls are still very strong here, it seems like, and pushing higher so far, right? Key level support around that 3,200 level. So you can see that 50% retracement came into play, bounced right off that level. I don't have a trade on. I wish I did. Obviously, this thing's ripping here, but it is what it is. I don't have a reason to be long gold at this time. Edge Finder reading on gold, if we just filter quickly for metals, you can see gold is getting a +1 reading, which just basically means we have mixed sentiment. PMIs yesterday and Monday were strong. That's a bearish catalyst for gold, right? That pushes back the probabilities of interest rate cuts. And so we see negative factors on gold prices as well. So for me, this is a no trade. There's no bearish reading here. There's no bullish reading. So for gold, from a technical perspective, it looks great. Looks like it's probably going to rush back to those all-time highs. Technicals look amazing. Fundamentally, I'm mixed. I just don't have enough reason to take a trade personally. If you have longs and you're doing well with them, congratulations. That's awesome. If you're short, it's a tough thing to short, in my opinion. We'll see how this area reacts if we do come into contact with that previous all-time high, if we put in some sort of double top, or if we're able to break through that. But for me personally, this would be a no trade. Like, there's nothing I can do here. I'm not going to short this. I'm not going to long this. And I don't, take trades when my system doesn't give me a reason to do so. So technically, it looks very bullish. Fundamentally, it looks mixed to bearish. So I'm no trade for me. Okay. It's an insane move. That's a really phenomenal move higher on gold. I wish I was in this trade. Like I said, anybody would want to be in a long at this, with that kind of move. That's a beautiful move. For me, the dollar index, I'm still playing the move here to a certain degree by my euro dollar long position. So I do have longs on the euro against the US dollar. Let's pull that up here for a second. So this is a trade that I'm currently in. It's been really sleepy, really boring trade so far. I bought around here. It's just gone sideways for a couple days. I'm looking for a push back up to these levels, and I would take a quick profit on that one. So for FX, yes, markets are slow and choppy this morning. Indices, commodities, we got action. This is, for me, it's one of my favorite things about being fundamentalist first, like looking at this stuff first, is that I don't have to, if currencies are not moving very well, or I don't have setups happening on currencies, I can just trade indices, or I can trade commodities, or whatever I'm getting a solid reading and good technicals on. That's what I trade, because again, I don't want to sit around and wait all day long for a chart to finally give me something to work with. Well, for me as a swing trader, that could mean all month long, right? I could wait for a whole month and not get a setup. If I stared at, euro dollar all day long, or gold all day long, if I don't have a reading, I don't have a reading, and I just move on. Let's take a look at Bitcoin. Is Bitcoin a reading on the Edge Finder? Nope, not a reading currently. So watching Bitcoin coming back down to this 94,000 level. Ethereum has also been kind of a dumpster fire here recently. Take a look at Ethereum on a weekly chart. Look at the difference. Bitcoin is teasing coming back to those all-time highs. Ethereum is just destroyed. This is just crazy how Ethereum at this time is 60% plus from its all-time highs. Bitcoin is 14%. So it just goes to show you that relative strength. Bitcoin, the OG crypto, is still on top, it seems like, relative to its peers.
Market analysis, free trading courses, Edge Finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Here's the thing. COT data is tricky at first, but very powerful and relatively straightforward once you get it. So sentiment from the Commitment of Traders report shows us what the smart players at the table are buying and selling. Point blank, hedge funds, institutional traders, professionals. What are they buying? What are they selling? That's a powerful indicator. We all know that, right? That's like day one trader can kind of understand that. These are what the pros are buying. These are what the pros are selling. Show me that data, and I feel like I have a little bit better of a clue as to what, the smart players are doing. Is it a guarantee that you just follow them and make money? Nope. It's not that easy, but it's a great confluence factor to add to your analysis. Just like everything else that we talk about here, it's about building a full picture, adding insights to your trading to make more informed decisions. That's what we're trying to do here every day on these streams, right? So take a look at this. So if I take a look at gold, silver, JPY, US oil, these things are institutionals are very long, these things. In fact, this oil positioning is very curious to me, and it makes me want to buy contrarian long positions on oil because oil's been such a dumpster fire bear trend here recently. Anyways, what I do also want to show you with sentiment is the latest Commitment of Traders buys and sells. This is a weekly update to the COT data mapped out. So this shows us on a heat map what they bought the most of or what they sold the most of in the most recent filed report. Okay, so in the most recently filed report, there was significant accumulation of the Dow Jones, the Kiwi dollar, which you guys know we've been looking for longs on this channel, the Russell, the Euro, Platinum, the Nikkei. These are some things that institutions went shopping for. What did they sell? They sold the NASDAQ, they sold copper, they sold the Canadian dollar, they sold the S&P 500, they sold Bitcoin, and they sold a little bit of gold. Okay, so not a huge amount, because the way to read this is they changed long contracts, they decreased long exposure, but they also, in a less form, decreased short exposure. So they decreased exposure across the board, but they decreased more long exposure. So we'd call that slightly leaning bearish for the week, right? So we built these tools to make that easy to read. So I look at COT data all the time, right, to get an idea of what big players are doing. But then I also look at something called the put to call ratio. It is my favorite sentiment indicator of this entire list. The put to call ratio shows me what crowd sentiment in the options market is doing. So right now, the way to read this without, doing a huge deep dive on the put to call ratio, when this gets very high, that shows you that there's a huge disproportionate bias towards investors buying puts. What are puts, you may ask? Well, if you're new to trading, you don't necessarily even have to trade options for this to be relevant to you. Puts are bearish bets that you can buy in the market. Calls are bullish bets that you can make on the market. You can buy bullish bets, essentially. So when everybody's buying puts, that tells you sentiment is fearful. Everyone's fearful. And the old Buffett expression, right? Be greedy when everybody's fearful, fearful when everybody's greedy. We've all probably heard that at least once or 1,000 times. So right now we would call this thing more in a fearful environment. People are scared of this market still, despite, we've had a rebound. People are still very fearful of this market. That makes me contrarian bullish, right? That is a bullish indicator. So these are things that I look at. Those are just a couple of the things that I look at to filter in how our top setups algorithm generates scores automatically. So it looks at the Commitment of Traders data for us. It looks at the put to call ratio for us. It looks at trend. It looks at seasonal trends. It looks at PMI data, retail sales, inflation like CPI, NFP reports. It's downloading all that information and algorithmically putting it together to build a score. So that's my system in a nutshell. Sentiment and fundamental analysis wise, and then technicals are very simple. I'm looking for support and resistance, market structure, and looking to trail stops. So that is an oversimplified version of what I'm looking for. So right now, going full circle, based on the top setups page, which has many of our sentiment indicators and fundamental indicators pointing towards bullishness for things like the S&P, the Dow Jones, the Russell, I am looking for opportunities to get long on these things this week. So if I can get a pullback in the S&P 500 to 5,500, that's probably an area where I would take a stab on the long side. Look at oil, guys. Oil's up 3.5%, which is fascinating. You actually had some news over the weekend. OPEC's having a little bit of an internal battle, if you will. Basically, what's going on with OPEC? Well, so what is OPEC, first of all? It's basically a cartel that controls the global supply of oil. Saudi Arabia, all these different countries are involved in it, and they, as a group, determine how much they want to put out into the market. Why would they want to do that? Well, they want to control the price of oil to some degree. If everybody who produces oil just massively pumps it, the price of oil will drop, and that will actually hurt their own marketplace. So they intentionally, collectively decide how much oil they want to pump into the global system. Well, there's been some drama here recently because several OPEC nations are not following that rule. So what do I mean by that? Well, let's say that we agree we're going to put out, X number of barrels per day. We're going to put out this number of barrels. And then some other country within OPEC breaks that rule and does way more. They increase the production and sell way more than the rest of the group. What does that do to the rest of the group? They get annoyed because they're like, well, you just lowered the price for us and broke our agreement, basically. So Saudi Arabia has actually taken the extreme and said, if you keep doing that, we're going to drastically increase the supply, because again, they're trying to keep their oil prices high. At $60, Saudi Arabia and all those countries are much less happy. They would much rather be selling oil up in the 75s, 70s, 80s level. They do not like oil prices down here. And if members of the group of OPEC are breaking the rules and selling, how do you respond to that if you're Saudi Arabia, which is obviously a massive producer? Well, hey, if you guys don't get back in line, we're going to tank the price and make it very painful for those breaking the rules, because they'll just massively flood the market. So oil prices have been trending lower on all this drama, and for good reason, right? You got to think like, oh, if OPEC is having internal strife, and this has been a theme for decades, right? They always are debating, fighting, infighting about oil prices and all this and that. The point, however, is that oil, I think, is starting to get a little oversold personally. Oil prices are down, and I think it is, you saw this big capitulation gap lower over the weekend, and now I do see price potentially is trying to rebound. We may be due for, at the very least, a couple weeks of upside in oil prices, because I think Saudi Arabia kind of taking that strong stance may actually get what they want done, where they, get the others in line, if you will, in terms of oil producers. It's my opinion. I think oil prices are a little overdone here to the downside. Oil's getting a neutral reading on the Edge Finder, and the technicals look terrible, so that's not going to be a trade for me on a short-term basis. On a contrarian basis,
someone asked in the chat, do you think the Fed is going to cut tomorrow? I don't think so, in my opinion. If we look at the CME Fed Watch tool for tomorrow, there's a 98% chance that the Fed's going to, stick where they're at right now. But that's just my take. Now, when you go to June, it kind of shifts a little bit, 65% that nothing's going to happen in June, 33% chance that there will be a cut. And then, so this is a good tool, CME Fed Watch tool, good tool to see where the market's at probability-wise for rate cuts. But what I want to do is just share my positions, and then also, because I really haven't done anything, share how I'm going to manage those coming up to the Fed meeting. And then I'll just leave the rest of the time to answer questions. I know you guys had a lot of good questions in the chat, and I want to make sure that everyone gets their question answered, and keep the engagement going. Lambo Allen is on. Absolutely not. I don't know where that came from. I don't have a Lambo or anything like that. But it's funny, I guess. So where are we at right now with the dollar? Dollar index here, like I said last week, we've just been hanging around in this level, kind of just waiting to see. There's to me, it seems like indecision, right? We kind of broke past the 100, but didn't get any confirmation or follow through with that one. And then, 99 breaking below 99 and flushing down lower. We also didn't get that either. And I did anticipate like this range bound motion up until the Fed meeting, until we get more clarity as to like where the tone is going to be for the Fed. Are they going to be more confident that Fed, cuts are on the horizon, or are they going to be more of the usual, data dependent, wait and see approach? So for most of my positions, I'm pretty much still in them. Like dollar yen, I bought in right here at this green level. It's pulling back, giving back some of that. I don't mind holding it through. Most of my trades really are at really good levels. Like I bought dollar Swiss here at the 8100 or 81400 level. So they're still all in profit, which is why I'm like comfortable holding through. And they really haven't broken any structure. Like I see like dollar Swiss is losing this strength, right? It had some higher highs, higher lows, but now it's starting to fade off. And you can kind of see that in the dollar index itself. So that's what I'm basically looking for. Seeing if I want to hold through or not, and just being mindful of the tone that's going to be said tomorrow. Helicopter ball out is in the chat too. Now, one thing that gives me confidence to go ahead and continue with this long dollar in the short term is that on the edge finder, if we look at the eco and the top setups too, we do see that dollar yen, dollar Canadian, dollar Swiss is now seeing a little bit of bullishness, +3 score, not the best score, but considering that these were very bearish before, kind of tells me that, since I'm at a good price, I have the room to let it breathe and move. And because I'm going against the longer term picture, I don't mind letting it, go ahead and run. And if it hits break even, then it hits break even. But if I do see an obvious trigger that dollar is going to go ahead and depreciate, like if we get a certain statement coming out, like China is not cooperating, we're kind of back in that seat, then I'll just manually close those trades for whatever profit that I'll take. What's your reasoning behind buying dollar yen? Yeah, so in my opinion, I trade FX primarily, right? In my opinion, this year has been very catalyst news event driven. Sometimes you will see that certain figures that are being released gets ignored. Like I remember early in the year, we got a high CPI print in the US and the dollar sold off. Usually a higher CPI means a higher dollar. So I've been noticing those things, and I've been noticing that the bigger reactions are to news catalysts. So my biggest emphasis is being on keeping up with the news and finding out what's really driving price to move. And what I found is that a lot of it, and I sound like a broken record because I do weekly outlooks on my own channel, and I always say like Trump tariffs, and that's the thing that's really pushing the market, right? So the negotiations, right? Seeing negotiations happening cause dollar yen, dollar Swiss to go ahead and appreciate, because the yen and the Swiss are safe haven assets. So whenever this uncertainty was going into the market, yen and Swiss and gold saw a lot of inflows. So what I was basically doing is, when I saw that India was cooperating, and when I saw that the EU was getting some slack as far as automobiles, and that there were certain exemptions to certain industries or certain sectors in the market, I saw that on the horizon we could get more news catalysts that are pro tariff deals. And so I went ahead and took that contrary position. Now I also use that with a mix of technical analysis. So when I saw that we were at this level here on the daily or even the weekly of support, we saw it hold 1 time, 2 times, 3 times, and then ultimately 4. I kind of blended those two conclusions that I came up with and said, okay, this is a attractive way to go ahead and buy and take a stab at it. So that was my basis for dollar yen. Basically, if uncertainty comes down, those safe havens are going to be in less demand, and more dollar demand will go ahead and come through with that. Isn't FX way harder to trade though? It poses a lot of more, to each their own. To be quite honest, I've always just traded FX, like back in 2017, 2018. That was just what I was introduced to by my dad, and I stuck around with it. So I guess I've formed a betterment understanding. Like if you were to tell me to start trading options, I'd probably lose a lot of money because it's just not my forte. It's not what I'm used to. But to your point, yes, FX is a very range bound motion, and but that could be a good thing. If for example, the euro is one of those things that I've been playing. Is like last year I was just shorting the euro because, like you said, it's just been in this range bound motion. So whenever we hit levels like this, you can know with a good probability, if the fundamentals are aligned and sentiment aligned, that this is a good way, probability wise, to go ahead and short and make money on these moves. Same thing to the upside. 1, 2, 3, times where price really respected this level here, the 104 handle, give or take. You can take advantage of those moves, right? So being range bound, especially when the range is like, I don't know, 750 pips, is not necessarily a bad thing. And a lot of people, when it comes to FX, their approach is dollar cost averaging, because you can really catch these moves if you're pretty conservative, like take small positions and wait for the move to ultimately happen. When it does happen, that's when you catch these 700,000 pip moves. But I would say scalping is way harder than my swing trading approach for Forex. And that's just my opinion. When it comes to scalping, you're at a really big disadvantage if you're kind of just comparing what other people have as far as tools wise. Like I was talking to, like, when it comes to traditional prop firms, like the ones where you go in and work there, get a salary and stuff like that. Where I live in Chicago, like right over there, there's a bunch of them. And their edge is proximity, being close to the Chicago Mercantile Exchange, right? So they pay millions and millions of dollars to be, a little bit closer to the exchange to get milliseconds faster in execution speed and all this other stuff. So when you're looking at it like that, right, if you're scalping, that's who you're going up against, right? People that are willing to pay X amount for that and X amount for algorithms that have 5-figure overhead cost a month and things like that. So in my opinion, my biggest advantage as a retail trader that doesn't have those resources is swing trading markets like this. Swing trading the indices is a really good option. Swing trading anything, I think, is what fits my lifestyle the best and what I have access to. Trade FX futures. Yeah, FX futures I like as well. I don't trade futures, but the fact that it's a decentralized or centralized exchange, you have access to order flow in real time. I like that as well. And that's what the CFTC, the COT reports is based off of, the futures. Support and resistance are traps, only liquidity. It depends. Here, I like that because it's going to open the conversation that I like to, if the chat can get engaged. If we just look at this level, right, we're going to be hypothetical. September 30th, 2024, around. If you're looking at this level and you're saying, okay, in the past, price has respected it. If this is you, and I see this a lot with like the retail crowd, and I'm guilty of doing this when I first started as well. So I see this a lot. Super tight stops, trying to catch this insane move, right? If that's the case, you're going to get chopped around here until this move finally happens. And sometimes you can get chopped up until you have no more ammo to go, and then this move finally happens. So you can very much get caught into liquidity, if you want to call it that, when you're playing it like this. What I would say, if you're trying to catch this bigger move, then your risk or your stop loss needs to be appropriate as well. So maybe giving yourself a 200 pip stop loss or 150 pip stop loss. Now, a lot of people don't like that because when you increase your stop loss or widen it, that means your size has to come down. But I would rather much reduce my sizing to give myself an opportunity to really know if I'm right or wrong than to just gamble for, say, super tight stop loss trying to catch 600 pips, and then you're just going to get chopped up. Now, what you can also do is, let's say we go with a wide stop loss, you give it room to breathe, and you start seeing that prices indeed coming in your favor, right? We rejected the zone, we solidified that, and we're getting some push to the downside. Then you can go ahead and start adding responsibly in areas where it makes sense, and then you can maximize your profit that way. But at least you gave it a chance to solidify if this longer term move is going to work out. And that's pretty much what I do, is I take stabs at a market if I'm going with the trend, give it breathing room to work out. And if it works out and the fundamentals are in line and sentiment in line, then I will add to my position responsibly where it makes sense.
Okay, currency strength on the day. Here is yesterday, Japanese yen was strong. Today, Japanese yen is strong once again, along with the pound. The New Zealand dollar is coming back a little bit. Aussie's coming back a little bit. Swiss is weaker. That's a good sign. Let's take a look at some of those currencies. Aussie Swiss still climbing a little bit, seeing some profit and hopefully a lot more to go. CAD Swiss actively looking to carve out some lows here. Daily time frame oversold with divergence. Euro Swiss, I mean, this support level to me is pretty strong. So just watching. But on my Euro Swiss positions, there's my break even. If I get back into this clustered resistance around 9,600, I'd be okay taking some profit there and then just reloading positions. So if I can get, based on this break even, if I get price up to 96, I'll probably take some profit and then look to add back in at some fib levels, like use this low to high, try to add back in and scale in, and then look for a swing, either a 3 to 5 wave swing. So, you know, these like Swiss trades for me will continue to evolve, and I'll just keep, you know, hanging in there. Pound Swiss, looking good. Anybody buy the Pound Swiss? I mentioned if you wanted to start small, right back into this pocket, which is where we're bouncing now, area 1, and then at the lows would be area 2. So you got to trade small to kind of stomach that drawdown, which is about 300 pips, but upside of 1200, upside of 1300, even up to, I'd say even, you know, 1.12 to 1.14 would be a pretty good profit target right there. I mean, so you're looking at anywhere between 200 to 400 pips of movement. Pound Swiss, I think we fill this pocket. So, not too shabby. New Zealand Swiss continues to look better as well. This one's showing some profit and hopefully a lot more to go. If this is going to keep grinding higher, I may take some profit in here. Take the profit and then look for a pullback. Box in some fib levels, so a 382, 50, 618. And then look for some type of swing to symmetry. If that's a 3-wave move, bring it on. I'd love to see a great profit target there, and we could still get a 5-wave move out of this. But I'm not trying to take a bunch of unnecessary risk when the most common thing, especially if you're in a downtrend, you know, and you actually eventually catch the low, the easiest trade is a 1, 2, 3. Same thing if you're at a high. If you're at a high, easiest trade is a 1, 2, 3. If you want to wait for that extra 5th wave, it's like that's sometimes getting greedy. If it's still in an uptrend, usually you don't get a 5 wave, you just get a 3 wave. So if we can just get a 1, 2, 3, I think I'm okay taking some profit. If we get a 5th wave, which off of like crazy historical lows, yeah, a 5th wave is very possible if we're in the bottom. But I don't need to be greedy if I'm in a nice chunk of profit by the time we get that 3rd wave. So I'm still holding these currencies. Dollar Swiss, still hanging in there. So, I mean, pocket-wise, I think dollar Swiss comes back to this level. We might still, you know, slide lower. There might be divergence here. I'll see what happens. You know, we probably have to get on the right-hand side of the trend line. To be fair, resistance here. You know, this might take a while to kind of form the bottoming pattern. But if we get on the right-hand side of this trend line, it certainly looks a little bit better to make a recovery. Bigger picture-wise, you know, is it possible that this thing, you know, catches a bottom? We did clear these lows and sweep these lows. So if we are going to form a low here and then get all the way back up towards 92, that would be pretty nice. I did say this year that probably for the dollar Swiss to come back up we do need to see a correction in gold. Okay. I did close out a trade on CL as well. So crude light futures, we are up. You piece of. I closed out for break even yesterday. That was the trade that I wanted to see go up. I just took a small loss. It was basically fees only. I took a break even, so I think I paid, $10 commission in the futures market, so I lost $10 on the trade. But if anybody is long, this is what I talked about here. If you're long based on that support, I could see this coming right back up here. We've got support around $65. So if you're long, that's a good spot to be long with a tight stop, because upside is pretty favorable. Not bad. All right, let's go dollar index. Dollar index, still not ready to do anything major. I mean, I'm not taking the bait. I'm not going to take the bait to sell the dollar. Okay, I think if the dollar, makes a move in here, we still have a pullback. I'm trying to think what type of news and catalyst we have. It's like, does the Fed get the dollar to move a ton? Maybe. Would the dollar move a lot if the Fed decides we're not going to cut rates? If they really change up the plan for 2025, I'm still looking to see if the dollar will come back to 101 or 102. If it will grind back. If it grinds back up here, I'm looking for a trend line break, trade some confirmation, stop loss above. If we revisit the lows, target 1, we break and go to fresh lows, there's symmetry, target 2. Anything lower than that would be trail, and see if we have a big move. The flip side of that is, let's say that we go down to fresh lows. I think that's a trap. If we hit fresh lows and we see divergence, meaning price and momentum don't disagree, I wouldn't be shocked to see it recover from there. So I don't like selling the dollar. I think we've already, for the worst start in almost 30 years and down about 9%, I don't think there's a ton more to the downside, at least without having some type of pause or correction. Okay, so oil there. Let's go gold and silver. Gold having a strong 2-day run. I'm sure every aggressive buyer that's like, we got the 21 period moving average, we got a pullback, I'm buying gold. Yeah, maybe you're happy. I don't know if we're going too much higher than these previous highs. I can see gold consolidating here. And this isn't bad. Consolidation also means that, look, this can stay bid. If we consolidate here, let's say there's lows and there's highs, let's say we consolidate. Well, if the 21 period moves up and the 50 period moves up and the 100 period moves up, even a consolidation range like so offers up stronger support to buy. I'm not taking this like first dip. I'm still going to stand my ground. It's like, look, I've got a 3-year run on gold that I'm still holding, and I'm happy to hold it.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.